Let's start with one of the biggest movers today, and that's Lyft. Shares of the newly public company plunging in its second day of trading, falling below its IPO price of $72. That stock is expected to join the Renaissance IPO ETF any day now. IPO is one of the top performing U.S. ETFs this year. Look at this. It's up more than 30%. It's a basket of the most recent ETFs, last 60 or so of IPOs, excuse me. Kevin, is Lyft crashing the IPO party?
A little bit so, because the ETF market that reflects around IPOs, majority of those products inside the underlying ETF are companies that make money. The tale of two cities. Look at what happened with Levi's, an old state company with great cash flow, boring growth metrics, versus Lyft, which is fantastic growth in sales but makes absolutely nothing. So I always ask myself when I'm buying a stock, what portion of the free cash do I get in the form of a dividend each quarter? And the answer is obvious. You can measure it with something like a Levi's, but there is no free cash at Lyft.
Yeah.
So why is that nothing more than a speculation? And we can debate this till the cows come home, but that's a very treacherous stock.
Yeah.
It makes no money.
Yeah.
It's not only not making money, it's losing nearly $1 billion a year.
That's a problem. So can we generalize at this point? This is what I want to get to. We can say, okay, they might have gotten a little greedy on Lyft. I mean, the last round of funding was $15 billion. They tried to go at $23 billion, 50% more than the last round of funding. You know, that's a lot to ask for. Can we then generalize and say, what about all these other 200 IPOs that are out there?
Well, it's not really a transportation play, though it would seem to be. It's really a financial services play, because it's the investment bankers that are getting rich. It's the insiders selling their stock who are getting rich on this IPO. That's their motivation. They're not trying to help Main Street America, ordinary everyday investors, get wealthy on this trade. And that's why I'm so excited to see everybody has a rational, calm head by knocking the value of the IPO down below its initial price.
Right. So is this good news? I'm trying to spin this positively, Kevin. Pinterest, we already have data on them out there. Now, their last round of funding was $12 billion. I think it's safe to say they're not going to try to go for 50% more. They're not going to try to go for $18 billion. But where will they try to go for at this point? In other words, there's a point where every story is an individual story. And then there's a point where you can say, these guys are going to learn a lesson here. They're not going to go for the moon on this one.
I think it'll temper enthusiasm for pricing Pinterest, and of course the big daddy coming down the pike is Uber. You know, when an IPO breaks its issue price in the second trading day, that's really bad, because that means everybody that bought it on the IPO is losing money, and that's extremely negative. One way to look at Lyft and Uber, they're basically limo livery services with people and cars. The technology is not proprietary. Anybody can do it, and anybody that can raise a few $1 billion from investors and lose it can have one of these services. When you think about Uber, think of it this way. I use the service every single day. I use Lyft as well. Every time I use it, if you're a shareholder, I thank you because you're subsidizing my ride, because you're losing a lot of money to put me in that car. So I'm an investor in Lyft in the sense that I get in the car, and you're an investor in me, Mr. Wonderful, by paying for my ride up to 20% of its cost. You should really think that through when you're going to buy a stock like that. You're paying me to drive around cheaper. Why should I get that benefit? It's kind of crazy.
And this is why it makes perfect sense as a consumer to use the product, but a really bad idea as an investor to add it to your portfolio.
There's one other thing about why Lyft might be down today. Remember, New York is announcing congestion pricing now. They're going to try to charge $11.50 for going into New York below 60th Street. That's on top of the toll of $11 that's already to get into the Holland and Lincoln Tunnel these days. That may have a little bit of an impact on it. So what we should watch this week, TradeWeb is coming this week. This is one of these big electronic trading platforms. It's very well regarded on Wall Street. They're going to start trading on Thursday. They're backed by Blackstone and Thomson Reuters here. So that'll be trading on the NASDAQ. It'll be interesting to see how that prices. After that, maybe we'll see Pinterest price. My sense here is that Lyft trading lower is making future IPO pricing more careful. I think that you're not going to see Pinterest with an $18 billion
You're paying back everybody
valuation.
for being Debbie Downer on the Uber. I mean, on the Lyft thing. I mean, you were the most negative guy on it, and you were right. And now you're saying there's a ray of sunshine by forcing everybody else to be more realistic in pricing. You're probably right again.
And it's very healthy for the market overall. The IPOs are great news for investors generally and long term. It's great news for the investment banking community. We just need to make sure that we're dealing with it rationally.
Well, you're the investor. You're on the side of your people that you're investing for. You're not on the side of the bankers and the
Absolutely
insiders.
right. And we're not telling any of our clients to buy into these IPOs.
Good point.